Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is our first interview series with Mr. Greg Dickerson in the year 2022. And I have to know, what is he looking for? What is he seeing? What's he doing? This man has been doing it a long time. So let's welcome to the channel. How you doing, Greg?
Yeah, good to see you, man. How are you? I haven't seen you all year.
That's right. It's been, God, dude, where have you been? I'm telling you. That's awesome.
I haven't seen you since last year.
I know, man. What's up? That's hilarious. Thank you for that. That puts a smile on my face. Hey, I'm curious. We're in 2022. It's the first trading day of the year. It's January 3rd. When you look at the economy, what's it feel like to you? You know, I think we're at. I won't tell you where I'm at just yet. I'll ask you first. What's going on in the economy, kind of from where you're sitting in the catbird seat?
Yes, we have some interesting times coming up. There was a lot of selling at the end of the year, tax selling, rebalancing, things like that.
Yeah.
So generally in January, you might see, stocks especially pick up a little bit where firms are reallocating for the year and starting to, get into some positions. But this year is a little different because, obviously the pandemic is still ongoing. We've got supply chain issues. We're not sure what inventories are going to look like now coming off the holidays because, everybody stocked up well in advance. And I don't think, purchases were where everybody thought. I know sales were up and all that, but that's largely due to price increases, not
Yeah,
necessarily amount of goods sold.
exactly.
It was dollars, for prices and taxes being up,
Yeah.
things like that. But I think right now, all eyes are on the Fed. The economy as that is at the, luxury of the Fed, right? In other words, we are at all-time highs, and the only way to sustain that is new money to continue to come into the system because there has been profit taking. There's a lot of rebalancing going on, a lot of questions around China, Russia, things like that are, giving investors cause for concern. So, I think right now January is going to tell us a lot about what we can look for moving forward for the rest of 2022. But the Fed has to pull back. They got to start taking measures. They've lost credibility. They've made a policy mistake. And in order to keep world reserve status and keep confidence in the dollar, they have to stop the madness. And in order to do that, you got to let markets correct. Question is, how far do they let it go? How long do they let it go? And, what are the results with the rest of the world economies and things like that? And there's a big disconnect between the actual economy and the markets. And that's the big thing that needs to unwind, that we're all, waiting to see. But, we're at the luxury of the Fed right now. So we'll see what happens.
Yeah, when I look at 2022, and you never look at one thing, but everybody wants one thing. So the one thing that I put out there in my kind of 2022 kind of look ahead was, when does inflation peak? And this is what I said. If inflation peaks by March, the Fed can continue with the story they told us. 3 rate increases, stop the taper by March, the rates will go up. However, if inflation is still increasing by the summer, watch out. Then we're gonna have Jerome Powell turning to Paul Volcker. We're gonna tighten uncomfortably because he can't have inflation still increasing in June before the November elections. He just can't have that happen. So if we're still have rising inflation by the summer, watch out. Rates are going to go up. And I just checked between our videos, and the 10-year is up 10 basis points this morning, which is a bunch for a single day or a single morning. So yeah, I think the big takeaway for me is what's going on with inflation. What do you think?
Yeah, absolutely. And it's real and it's alive right now. And it's not transitory by any stretch of the imagination because, wages have gone up, rightfully so. They needed to.
Mhm.
But, some of the supply chain constraints and things like that and shutdowns that are creating, issues and pressure, some of that will, alleviate as we get further into the year and get, this pandemic behind us, especially with what we're dealing with now. But at the end of the day, I mean, fuel is still up, housing is still up, construction, goods, services. I mean, all of the consumables that, the world revolves around, food, things like that. I mean, to say that inflation is 6% is just ridiculous. I mean,
Oh, it's a joke.
We're looking at 15-20%. I think everybody knows it. And, again, the Fed's lost all credibility. They're in complete denial. They missed the boat completely. They had to act in 2008-9. They had to act, in 2020, but they didn't have to do what as they did. And I think everybody's starting to realize it now. And, they're going to end up doing more harm than good at the end of the day because, that liquidity has to unwind.
Yeah, that's the big unknown, right? I think it was, I forget who said it. There was an analyst. One of my subscribers sent me videos to look at, and I watch as many as I can. But basically talking about, hey, you can delay the pain, you can kick the can down the road, but when the pain comes back, it comes back with interest. And I thought that was an interesting way to look at it, right? So you delayed pain, right? You shut the economy down, you lowered rates, you bought all this stuff, you stayed too long. It's too much, and the interest payment on that pain's coming due, and I think 2022 is when it happens.
Yeah. And, the problem is for like retail investors, a lot of people get conditioned to think that, because of rightfully so, the market's done nothing but go straight up. So they think that it's going to continue to go straight up. But what you have to look at is the amount of liquidity that entered the market from March 2020 on, and that was the parabolic move. We were on a steady incline, a healthy-ish steady incline, since 08, 09, and we had a little dip, little correction, but we haven't had a serious correction really since then. Yeah. It's just been straight up and off to the races. And there's been a ton of liquidity and support by the Fed. Keeping that bull run going. So the question you have to ask yourself is, if I get in now, what's my real upside and how long do I have to really wait? And like I said, retail investors in all markets, have that buy the dip mentality. And you have to be careful. I've said, buy the dip, you become the dip. And people are like, well, what does that mean? Especially as the market goes up. Yeah. What that means is when it goes down, you bought the dip here, you become the dip down here. Yeah. So, buy the dip on an uptrend is one thing. Buying the dip on a downtrend is where that can backfire on you. And you got to really be aware, of what's going on. But, right now, market go up, and that's the path we've been on. So it's kind of hard to argue.
Yeah. The one phrase that frustrates me the most, and it's again because of personal experience, is the HODL, HODL, or diamond hands. Mm-hmm. Right. I don't mind the buy the dip mentality as long as you have stop losses, right? Because you don't want to be the dip. Right. And I say this as someone who was investing in Cisco Systems a lot in the early 2000s. And it had a stock split every year for, I don't know, 5 or 6 years. It was just straight up. But then if you bought the kind of last rollover, bought the last dip, you had to hold for like 12 years. It was dead money. The thing that really concerns me is people that want to do that.
Yeah. That's the exact example right there. You buy the dip, you become the dip. If the market doesn't rebound, off that dip right away, you can be the dip for a long time. And, holding long-term, can work, but there's always peaks and valleys. And if your goal is to grow, just like in real estate and business, anything else, you want to cash out at the peak, buy in at the valley, cash out at the peak, buy in at the valley. Mm-hmm. Now that can sound contradictory to what I just said, but again, like you said, stop losses, you want to have your limits set so that your stop loss is set so that if the market does dip below a certain level, you can get out. Mm-hmm. And, let's just take Bitcoin, for example. So, the recent bottom was July, of 2021. And, we've gone up 135% since then. Well, if you just bought peaks and valleys on the way up of that uptrend, if you sold at every peak, because it goes up and down, 8 to 10 to 15%, sometimes 20 along the way, you could have had something like 400 or 500% return versus 135 if you just bought at the bottom, sold on these little peaks and valleys, and they're pretty easy to spot. They're not super tricky in an uptrend. A little bit more difficult when we're in a downtrend right now, where that bottom and top's going to be.
Yeah.
But
the falling knife, the dead cat bounce, all of that stuff.
Yeah, you can get caught, but along the way, and see, that's the mentality a lot of people have, is just buy and never sell. But you want to, if you want to hold Bitcoin or stock or whatever, your goal should be to accumulate more. And the best way to do it is to sell at the peak, buy lower, you get more, sell high, and just keep growing that, that asset base. And,
the arrogance of diamond hands or foolishness. Actually, it's not arrogance, it's foolishness. Right. When this rolls over, and we all know what happens, corrections happen. It's part of the business cycle. Having dead money, like, can you imagine somebody who bought AMC at whatever the peak was, 155 or whatever, in the short squeeze arena, being a diamond? This stock will never get back to that. Or if it does, it'll be 12 years.
There's a lot of people that did that, and that's what they're doing, and they have no choice. And that's where a lot of that comes from. So you got to understand the meme stock culture, the crypto culture. crypto, especially, it takes new investor capital. It takes new investment to keep the price going up and to support it. So you have to go recruit other people and convince other people to buy, but not only buy, but to hold on, because price only goes down if you're selling, right? Price doesn't go up as you're selling necessarily. So the whole mentality of that is, nobody sell, that way we all go up together. But at some day you got to liquidate.
Yeah.
Right. And what a lot of people forget or don't care about this game and stocks, crypto, anything like that, is that when you're making money, you're taking it from somebody else. Somebody's winning and somebody's losing on each side of those trades, as it goes up. So it's only so sustainable to a point each way. But the meme stock thing is nuts, man. I saw people, in GameStop, AMC. I mean, GameStop was worse. Didn't that get up to like $300-400?
Oh, it's crazy. Yeah. And they have no new strategy.
Who bought that? I mean, who's buying that? It's kind of like when Bitcoin hit, 69,000, everybody was talking about 100,000. Everybody's talking about 100,000 by the end of the year. At 69, 70, there really wasn't a whole lot of appetite. And I'm like, who's buying there? Because there's so much downside.
So funny. You're right. Because more people were talking about Bitcoin, buying Bitcoin at 69 than 29, because it rolled over, right? I think it went all the way down to 29, maybe it was 31.
Yeah.
It halved, and less people were talking about buying it at 30 than 70. It's just crazy.
Yeah. So we've seen a floor, arguably that's probably barring, an event like we saw in March 2020, that's probably a local floor that we're not going to break necessarily unless something significant happens, big sell-off in the markets, things like that. As long as we keep floating along and the Fed keeps participating, that probably won't go much lower than that. But it doesn't look like we're going to go above 69, anytime soon either. So it seems like, that 30 to 70 seems to be our range.
Yeah. So when we look at 2022 as an economy, do you think a recession is possible?
Yeah. So that's just a dip in GDP, for what, 10%, dip in GDP for,
it's actually just, it's negative. It's just negative growth in GDP. So the raw number, 2 quarters in a row. It could be negative 1%, for example.
Okay, just negative growth. Okay. So I mean, it's possible. The biggest thing that we're looking at right now is stagflation, right? So,
correct. I agree.
We have low growth and high inflation. So
Agreed.
That's the real risk on the table right now. So yeah, that's absolutely possible. But a lot of it depends on, where we are with the pandemic and real demand and real consumption, because, we're a consumer-based economy globally. So it's all based on demand and consumption. Right now, demand is still pretty high for a lot of things in a lot of areas.
Yeah. So how about this question? Do you think we have at least one 15 to 20% correction in the stock market? And we'll call the stock market the S&P 500. Do you think we could see a dip down 20%?
I think 30. I think you're going to see 25 to 30.
All right.
Yeah. 25 to 30.
Sometime this year.
Yeah, I think so. And I think the Fed is going to step in and not let it get much lower than that.
That's kind of their threshold.
On.
Yeah.
Yeah. I think they'll stand by up to 30%. I think you start getting, and it depends on how quick, if it's an instant thing, they're going to jump in, but if it's over a few months, they'll let it go.
Yeah.
And I think that's what they're trying to do. So what I'm saying is, behind the scenes of the Fed, they're saying, look, this is our number, 25, 30% over a few months. We're okay. Let it go.
Right.
That's where we need to be.
We need to get back to the trend line, right? We've been here too long.
Line, that's where we should be. We should be 25, 30% below where we were, because we were kind of on that slow upward trend.
Yeah.
And then we had March, and then, $1 trillion came in.
Yeah, it was crazy. Yeah, I this is gonna be a fun year to watch. I think this is the year that we get back to normal. I do think we got to revert to the mean. I think there's been a lot of asset inflation and just real inflation. I think this year's just got to adjust. I think it needs to happen. So, Greg, where can people find you?
Yeah, gregdickerson.com. All my info's there. YouTube channel, podcast. Go check it out.
Yeah, do yourself a favor. Subscribe to his YouTube channel. He covers lots of things that I do not: entrepreneurship, Bitcoin, cryptocurrencies, things of that nature. I have no experience, so I tune in and watch his stuff. Thanks, Greg.
Yep. We'll talk to you soon.
You got it.